What do the BRICS nations and you have in common? Once you strip out all the government data and rhetoric, the actual lived experience of everyday Americans dealing with true inflation is troubling. The U.S. national policy has weaponized the dollar as leverage in international trade. The unfair use of this leverage against trading partners, exporting U.S. inflation by forcing countries to hold depreciating dollars in reserve, the ever-growing national debt, and excessive money printing is just scratching the surface. To help make sense of this present economic environment, we will hear from economic analyst and author Mike Maloney, economist and investor Keith Weiner, and macro analyst and investor Lyn Alden.
Almost every single developed country today developed back under a hard money standard, back under when gold was money. People were able to save money reliably and then deploy that capital. In terms of the monetary system, what makes a European country or America or Canada or Australia or Japan, what makes them different than the Brazils of the world or the South Africas of the world or other countries like that, is that those developing countries, nobody really wants to lend to them in their own currency. And so they lend to them in dollars or euros, usually dollars. And so these countries have dollar-denominated debt. And the challenge there is that any time the United States can harden that debt, they can just jack rates from 0 to 6% and do quantitative tightening and just kind of basically try to break that country and damage them and then get concessions from them. Or if there's a lot of other countries that are saving in treasuries, they build up huge trade surpluses, we can devalue them. We can kind of rug pull the savings if we find that it's in the United States' best interest. And so we kind of push a lot of this volatility out into the rest of the world.
And Secretary Connolly said, well, it's our dollar, but it's your problem. Whenever I hear the word work, I always, in my mind, sort of rewrite that term to mean get away with. So they're currently getting away with it. And, to quote from Adam Smith, there's a great deal of ruin in a nation. They get away with it longer than you think they can. So that's the phase that we're in at the moment. Now, the one thing I would add, a lot of people have, I think, misconstrued why the dollar continues to have value, and they think it's basically mass delusion or faith or just a matter of one little pinprick to the bubble, and then when everybody comes to wake up and realize, the nature of the scheme, the whole thing comes tumbling down. And my view is different, and my view is that it's the struggles of the debtors that give value to the dollar. So every farmer, every miner, every distributor, every manufacturer, every restaurant, every productive enterprise you can think of just about has borrowed to finance their business. How do we know they borrowed? First of all, just look at the economic statistics. Secondly, the interest rate's been falling for basically 40 years. So if you didn't want to borrow at 15%, sir, how about 14%? Oh, sir, how about 13%, 12, 11? And every step down is a greater and greater temptation to borrow. So at some point, everybody borrows, and if you don't borrow, your competitors will, and they'll beat you that way. So once you have made the commitment to borrow, you now have this debt. Let's say you're a farmer, you owe $1 million. You must work your you-know-what off to produce enough, let's say, wheat, to dump that wheat on the market, dump it on the bid price that is pushing down the price of wheat in order to hopefully, desperately raise enough cash to service the mortgage that you have on your farm. If you don't do that, they're going to take your farm and your house away and dump you out on the street. So every debtor is in this position of working on a treadmill, that every time the interest rate falls, the treadmill is cranking up faster and faster and faster, and they have to produce more and more and more to dump it on the market. So if we define the value of the dollar as the purchasing power of what you can buy, they've got all the producers cranking away on these treadmills. And so that's why it works, that's why the dollar has value, and that's why everybody's comfortable to hold the dollar balance.
Governments never stop printing more currency and adding currency to circulation. Therefore, prices keep on going up, not because the stuff that you're trying to buy is changing. The real estate doesn't change. What has changed is the currency purchases less and less. It's the currency going down, not prices going up. When you measure things with gold and silver, there is no inflation. Everything just travels inside of a valuation channel, going from overvalued to undervalued to overvalued to undervalued. And as the public starts to wake up, gold and silver go through the roof, and they automatically revalue themselves, and they catch up to all the currency that's been produced. Gold and silver are honest money. We're not just talking about sound money, we're talking about honest money, because there's no fraud and theft involved. With fiat currencies, there is fraud and theft. Every transaction with gold, the amount of time and effort to dig it up, mine it, refine it, mint it into a coin, and then buy something with it, it's an equal trade. You're trading something for something. With fiat currency, when you borrow currency into existence by saying, here's this house I found, I want to borrow $1 million, and the bank imagines $1 million worth of IOUs into your account, you pay the seller with those IOUs, it's a trade of nothing for something. and that's fraud and it's theft.
How do you hedge against an ever-depreciating fiat dollar? Own the opposite. Sound money. Sound money is built with assets that have scarcity, a long track record of trust and value, and cannot be printed by central banks. If you are interested in protecting your retirement savings and preserving your purchasing power through a tax-deferred Gold IRA, see the links in the video description. To attend a free Gold Education webinar held by Augusta Precious Metals, see the link in the video description. Thank you for watching.